Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday, the 6th of February, comes to you from London. And we start with the US stock market after massive falls last night. And it's interesting, at the beginning of last year, we felt that the markets had 20% upside. We could see these targets, we had multiple targets, and we had an amazing year as a result of these targets. At the start of this year, we've been commentating, we've been saying, we were a little bit fearful because we couldn't see any new upside targets. And so that we didn't, I definitely didn't call a top. Calling top's a mugs game, but it was clear at the start of last year that markets were lined up for big rises. We had good upside targets on all the major US indices, and this year there was just a shortage of them. All those targets that had been given had been met, and that really made calling what the markets would do this year difficult. Of course, the key thing is this a correction? If we get another thrust from this, we will get new upside targets and the markets will go even higher. But until we get those thrusts, a pullback and an activation, it's too hard to say whether this is a top and the beginning of a new downtrend, or whether this is just a correction that we will recover from. And we will need to watch how these trends and targets play out. We will now get new downside targets off these moves. Will those downside targets be activated, i.e. will we see lower lows? So we'll start by looking at the dollar. The dollar index is looking better than it has been for a little while because we are bullish above the cloud here. We've got some upside targets. We're still very much in a downtrend, and we have activated this downside target. It needs to be remembered that markets fell yesterday based on strong job numbers, strong wage growth in the US, and fears of inflation, meaning a bigger acceleration of interest rates. And the markets took fright from that. And if we look at the euro, we see that euro is bearish below the cloud, still bullish in the medium long term against the dollar, but the euro did sell off. It's back recovering this morning, up some 0.4%. And the yen, we saw the dollar fall away here as well. Yen tends to be a safe haven when we see these kind of fears in the markets, and so the yen strengthened, dollar weakened here, so we're seeing that as well. Sterling falling back below the 140 level against the dollar, looking better medium and long term, but is falling back at the moment. And against the euro, sterling very clearly falling back to this 112 level, and still looking bearish on the medium and long term charts, and the medium term just turning bearish there on the cloud. So sterling looking less good than it has done against the euro. Against the Swiss franc, much the same picture. Swiss franc, along with gold, tends to be a safe haven currency, and against the Australian dollar, sterling just fairly flat here, although we are just deteriorating a little bit. Of course, the other big story yesterday was Bitcoin. We were down some 20% at one stage. We did recover slightly to end up about 16% down on the day, but we're down a further 13% this morning. This is just one directional at the moment. We had targets to 7,000, 7,500. We've got a very big downside target here to 4,482. That's really probably the next place to look to. That would be back towards the cloud support, and we see here now on the medium term chart, and unless we get an amazing bounce, this lagging line coming through, we're turning bearish on Bitcoin. I will tweet throughout the day. Updata users now can tweet directly from the chart. So that makes tweeting very, very easy. Now, we talked about the US markets. S&P is still above the cloud on the medium-term chart. The Nasdaq also above the cloud. So this could still be a correction. The Dow also touched right on cloud support yesterday. And recovered a little bit. So we didn't see the low. We did trade off the lows that we saw in the day. So again, we could see a little bit of a recovery, and we see that on the Russell. There's no question though that this move is going to show up on the charts for some time, and so it will be really key to see how that plays out. Looking at the S&P future, we are up just under 1% this morning, so we are seeing a little bit of a bounce here. Again, we seem to be finding support around this cloud, and the Nasdaq E-mini, much the same picture. We're finding support on the cloud and a little bit of recovery here, nearly 1% upside. So we do have a new upside target here of 2.7%. So we are seeing potential for this recovery to take place. What we have to watch for is a lower high and then a lower low. This would be bad for the market. Conversely, if we see a move back above this level, that would be extremely bullish, giving us new buying wave going even higher than this previous high. This is probably going to take some time to play out now. It's not going to happen in days, and we will see the recovery and will we go lower. The market will be spooked by this move last night. Taking a look at the FTSE 100, the FTSE 100 now very clearly bearish on the medium term, finding some support here on the long term. We've still got upside targets. For the short term, we've been bearish on FTSE for the last couple of weeks, just below the cloud here, and it really now is playing out. So looking really terrible there, down 2.2% this morning. And not remember, the US was down, Dow was down 4.6%. The FTSE had already fallen quite a bit yesterday on the Dow's move, so we're around the same down if you count yesterday's move. And if we see the FTSE 250, that's also looking very bearish. No clear downside targets yet. They've all been exceeded on the short-term charts, but we will start to get new downside targets from here. The key thing is, will they be activated? Looking at the DAX falling quite heavily as well, down over 2% this morning, finding some support here on the cloud, but medium term, these trends are all starting to have an effect. The Nikkei also we're seeing down 4.7%, so similar levels as we saw on the Dow. Not quite through yet on the medium term lagging line, but looking pretty worrying on the charts there as well. And the Hang Seng down 5.12%, a little bit more than the other markets because it has had an amazing run. So there's been a lot of potential to sell off there. And Shanghai down 3.3%, bearish on the short term, but holding on the medium and long term. We do have a downside target here of a further 2.7% downside. So taking a look at the Sensex, also lower, but holding on to its cloud position, looking much better than the European markets. Most of the Asian markets still holding the medium-term trends. The Aussie market down 3%, sitting just on the cloud support on the lagging line, closed right there, so it'll be interesting to see. We do have an activated downside target for the Aussie market, a further 9% downside, but we do have a lot of upside targets still there, so it will be very interesting to see whether that plays out. Brent Crude continues to fall on the bearishness that we're seeing in markets, and we're down into the mid-60s now on Brent Crude, and WTI into the low 60s, bearish, with downside potential here of 3%, and on the same on Brent Crude, we're seeing 2.5% and 3.7% downside. US nat gas was a big faller yesterday. It's up 1% at the moment, so a little bit better. Copper falling 1% as well. Nearly everything falling, really. We take a look at just some of the commodities. Heating oil down, coffee down. Cocoa is bullish in the short term, a rare bright spot, but medium and long term bearish. Cotton, bearish short term. Sugar has jumped, so we are seeing sugar up 2%. That's a bright spot. Wheat is bearish. Soybeans bearish. Corn bearish. Most of the softs bearish. Of course, the big one to look for is gold, and we would expect that to be bullish, but it's found some short-term resistance here on the cloud, so really key that we are just struggling to get through. We're through on the price, but not yet on the lagging line, but we are seeing amazingly strong upside charts here. And of course, gold, if it can break this 370 level, that's new 3-year highs for gold. We have a new upside target here. This pullback this morning, if we activate that, then we'll see a target to 1374, taking us to, if we can get to 1374, that would be a new 3-year high for gold. So gold obviously looking better in a sea of red in the markets. And if we take a look at silver, similarly, it needs to get through the short-term cloud chart. US Treasury yields fell quite sharply yesterday, which is quite a surprise because these job numbers and wage inflation in the US implied that we would see a faster rising of interest rates, but in a way that was already priced in. We'd got to 288 at one point at the start of yesterday. This was the reaction to that, but we are recovering quite strongly this morning. We still have 3.1% as the target for 10-year Treasury yields, and we're seeing still a lot of upside targets. There is a downside target to 2.47%, but that's not yet activated. So for the moment, Treasury yields look pretty good. Apple, we were pretty bearish on the last few weeks because we've been below the cloud. It has been showing relative weakness. We're now in the medium term bearish as well. We've got a downside target of a further 6%, 6.6% on Apple, so that's a worry. Google also fell very sharply yesterday, and we still are holding the medium term trend, but interesting that we really just fell out of bed there. Amazon holding on to its bull trends on all three charts, and it was up while the market was down at one point yesterday, but it succumbed in the end. Facebook also lower, back into the low 180s, has really struggled to hold this 190s level, and I sold most of my Facebook shares a couple of weeks ago. Again, we've got great upside targets here on the long-term charts, but we've just struggled in the short term, and gold plays look better at the moment. Microsoft also having had an amazing run. Again, I sold my Microsoft holdings at the start of the year, starting to look bearish as well. That's it for today. Keep an eye on those markets. Follow me on my Twitter handle. It's @ChartsToday. You'll see me tweeting throughout the day. Lots of activity yesterday, 31 tweets yesterday. So keep an eye on Twitter, and hopefully we'll see a recovery in these markets, and this is not the beginning of a meltdown. We'll just have to watch how this plays out. Until tomorrow, bye for now.